Hey, what's going on, everyone? I'm Jonathan Wang, and this is Motivational Money. We're going to talk about the one thing that everybody wants, money, in ways to shape out a mindset that can help get you to where you need to be. In this episode, we'll be talking about times of uncertainty and two things to always remember to restore your confidence in US markets. Nobody likes talking about the rainy days, nor do most people even think about it. What will you do when the next market crash happens? It happened in 2022 with the crisis in Ukraine. It happened in 2020 with COVID. It happened in 2009 with the housing crisis. In the 90s with the dot-com, in 87 with Black Monday, and all the way back to the Great Depression in 1929. Market volatility is inevitable. There will always be economic cycles that shake up financial markets and plenty of crazy in between. These are the rainy days that you're going to be put to the test to see how well you can navigate through stressful times. It's tough. When you see the world around you going crazy, how could you not get spooked and second guess yourself? It's a reason why so many people don't want to touch it. The good thing is that in the midst of all this crazy, you can recalibrate your mind to be market ready by going back to basics. Here are two fundamental things to remember to restore your confidence in financial markets. The first fundamental to remember is that the United States is the world's largest economy with a strong rule of law. When you look at global stock exchanges as a whole, the American markets are larger than the next 10 combined. The top three by country would be the US, followed by China, and Japan in third. This goes hand in hand with how they stack up as the world's three largest economies. So what is rule of law, and why does that matter? It's the entire set of laws, norms, and commitments that govern society. Rule of law has four universal principles that apply to everything, especially financial markets. The first is accountability. This applies to everyone, the government, the people, and the institutions. Strong accountability ensures fairness for all parties. Second is having just laws. This means that laws are clear, not ambiguous. They're publicly available, not hidden behind closed doors, and that they're applied fairly to protect fundamental rights, than rather in a biased way to just serve the highest bidder. Third is an open government where government activities are accessible and fair. And fourth is accessible justice. This means justice is accessible to all, not just to wealthy or government elites, and that it's delivered ethically, fairly, and in a timely manner. A country that does not have a strong rule of law tends to operate behind closed doors, where laws are not publicized for the people to see. They actually change, which is terrifying because it makes it difficult to have fair representation when going against a government or a vested interest of the government. Now, with the rule of law in the United States, it's commonly referred to as SUSA. Here's what that means in the stock market. When public companies issue guidance or report earnings each quarter, the last thing they want to do is miss guidance or analyst expectations. If they do, not only do they risk a massive sell-off of their stock, but oftentimes when a miss is so big that the stock craters, you see headlines from law firms soliciting investors to join a class action lawsuit if they realize loss is over whatever dollar amount. This is why public companies file an 8K form anytime there's an unscheduled event that could have a material impact on the company. It's to let investors know, hey, there's something that was not expected and they may want to know about it. A strong rule of law means that the law is on your side to protect fairness and the credibility of information, especially when it comes to financial markets. So take comfort in the strong rule of law that backs the United States markets. The second fundamental to remember is that in the United States, all public companies are required by law to make their financials available every quarter to the public for free. Not only are they public and free, but they're audited by big-time CPA firms. It's very strict, so any funny business in cooking the books, and not only is a company on the hook, but the executives and the CPA firm as well. So let's connect the dots to answer the question. What will you do when the next market crash happens? There are three things to think about. Companies provide guidance, Wall Street analysts set expectations, and you have access to company financials. That means you can literally connect the dots to plot whether a company is growing or shrinking based on its future outlook and analyst expectations. The next time the market crashes, you're going to see a lot of companies adjusting guidance down. So companies that maintain record level growth and guidance are going to stand out far more in a sell-off than when entire markets are growing altogether. When you look back to every major market crash, there's two things that happen. First, you have a mass sell-off, which can be triggered by just one piece of news and then amplified by mass hysteria. Think about that. During a sell-off, How many people do you think did the due diligence of checking a company's financials before selling off their entire portfolio? Not a whole lot. So second comes the recovery, where companies that became undervalued from the sell-off suddenly become very attractive, especially when they deliver record performances in the midst of a collapse. Then all of a sudden, everyone has amnesia and they completely forget the panic they just had, and they go right back to a bull market. This flip-flop is what puts a lot of people through the ringers, and it happens in every major market crash. Let's look back and look at what happened with the COVID crash in 2020. Early January, the first COVID case was reported in China. By the end of the month, the CDC confirmed the first US case. In March, 21 passengers on a California cruise ship tested positive. Shortly after, the World Health Organization declared this as an official pandemic. The United States declared this as a national emergency. And that's when the shelter-in-place mandates started rolling out. By April, 20 million people lost their jobs. The economy shut down. This was worse than the 2008 financial crisis. In 35 days, the Dow Jones dropped 35%. In moments like those, seeing the panic, it will often feel like you're in a scene from the Titanic where the lifeboats are trying to find survivors. Going back to these two fundamentals, we should ask, is there any company out there that's still guiding growth? Yes. Here's two: Lululemon and EPAM system. In the peak of the sell-off, Wall Street pulled back on their outlook and earnings expectations. Companies were reissuing and even withholding guidance. In the worst of all times, Lululemon and EPAM stood out like a sore thumb. Not only were they still projecting growth, but they were expecting record levels of growth for both their top and bottom line. Could it be possible for companies to actually thrive in the middle of a pandemic? Yes. With the shelter-in-place mandates, businesses were closed. This means gyms. Consumer behavior shifted and at-home fitness skyrocketed. Now, Lululemon had been known for their women's yoga pants, but now that so many people were picking up fitness as a new hobby or just looking for more comfortable attire, Lululemon did an incredible job with their men's and women's collection. From fitness accessories and athleisure apparel to ultra comfortable ready for work outfits in their men's line, Lululemon was one of the hottest retail destinations. With EPAM, this is an American company and one of the largest software engineering firms in the world. What do they do? Well, early on in the pandemic, when COVID testing first rolled out, lines were down the street at testing centers where patients waited in their cars for over 4 hours before they could get to the tent for their test. EPAM partnered with Curagram and developed an app for patients to pre-register, schedule an appointment, get in, get tested, and get out within minutes. Not only did Lululemon and EPAM have record level guidance, but they blew it out of the water, and investors were greatly rewarded. It's moments like these that make you wonder, what else do they do? A whole lot. Learning about what makes great companies like these do is what makes the journey as an investor so exciting. I emphasize the importance of discipline, focus, commitment, and peace of mind because the law is on your side. Everything you need to be successful is already available to you for free. The reason most people kick themselves when they realize that they were on the wrong side of a trade is because they made an impulsive and rash decision out of greed or fear. Peace of mind is important to make sound decisions because when you're frenzied, it's absolutely blinding. If you're going through this, don't get discouraged. Whatever happened in the past, you can let it go. Don't ruminate on it like a broken record. There's a reason the windshield is bigger than the rear view mirror. The important thing for you to focus on is what you will do when the next market crash happens. Now, knowing that the law is on your side to protect the integrity, transparency, and accessibility to financial information, will you make the best out of it? Friends, investing is such a great privilege that each person can make their own. Financial markets can be cruel with all the uncertainty and volatility. At the same time, it's incredibly fair. No one person can legally trade knowing more information than another, and there's an unlimited potential for sound investments to be greatly rewarded. So how do you get into the rhythm of finding good companies to start with? How do you get started with these free resources? With so many of them out there, what are 3 main free resources that every investor should know? Until next time, I'm Jonathan Wang. Stay sharp. Stay safe, everyone.